Something just happened in the silver market that hasn't occurred in 4 decades. And if you're not paying attention right now, you're about to miss one of the most significant wealth transfer opportunities of our generation. I'm talking about a technical breakout that market analysts have been watching for since the early 1980s, a resistance level that's held firm through multiple bull markets, through the 2008 financial crisis, through the 2011 precious metals peak, through everything. And it just shattered. But here's what most people don't understand. This isn't just about a line on a chart being crossed. This is about what happens next. Because when a 40-year resistance level breaks, it doesn't just mean silver goes up a little bit. It means we're entering an entirely different phase of this market, a phase that could redefine what we think is possible for silver prices. Let me show you exactly what's happening, why it matters, and what the smart money is doing right now, while everyone else is still trying to figure out if this is real. The resistance level I'm talking about sits in a range that silver has tested and failed to break through convincingly since the Hunt brothers drove prices to their all-time peak. We're talking about a technical ceiling that's been in place longer than most people have been investing, longer than the internet, longer than cell phones. This is a generational resistance level. And when I say it just broke, I don't mean it touched it and bounced back down like it's done dozens of times before. I mean it smashed through with the kind of volume and conviction that tells you something fundamental has changed in this market. Think about what a 40-year resistance level represents. It's not just a random line drawn by technical analysts. It's the collective memory of every major player in the silver market. It's where central banks have historically stepped in, where commercial shorts have piled on, where retail investors have taken profits for 4 decades. It's a psychological barrier as much as a technical one. And those barriers don't break without a reason. So what changed? Why now, after holding firm through multiple attempts, multiple bull markets, multiple crises, did this level finally give way? The answer is actually a convergence of factors that's never happened before in the history of the silver market. And I need you to understand each one, because together, they create a perfect storm that could send silver to levels most people think are impossible. First, let's talk about what's happening in the physical market. Silver mine production has been essentially flat for years, while industrial demand has exploded. We're not talking about jewelry demand or investment demand that can fluctuate with sentiment. We're talking about industrial applications where silver is irreplaceable. Solar panels, electric vehicles, 5G infrastructure, medical devices, electronics that didn't even exist the last time silver tested these levels. The solar industry alone is now consuming silver at a rate that would have been unthinkable a decade ago. Every solar panel requires silver for its photovoltaic cells. There's no substitute that works as well. And as countries race to meet climate goals and energy independence targets, solar installations are accelerating globally. That's not demand that's going to slow down. That's structural demand that's only going in one direction. Then you've got the electric vehicle revolution. Each EV uses significantly more silver than a traditional combustion engine vehicle. We're talking about silver in the batteries, in the charging systems, in the electrical components throughout the vehicle. And global EV sales aren't just growing, they're exploding. Major automakers have committed to going fully electric within the next decade. That's millions of vehicles per year, each one requiring more silver than the last generation of cars. But here's where it gets really interesting. While industrial demand is soaring, mine supply isn't keeping pace. In fact, many of the world's largest silver mines are seeing declining ore grades. That means they have to process more rock to get the same amount of silver. Production costs are rising, and unlike gold, where mines can remain profitable even with lower grades because of gold's high price, silver mines operate on much thinner margins. What happens when you have surging demand and constrained supply? Economics 101 tells you prices have to rise. But in the silver market, there's been a complicating factor for years: the paper market. See, the vast majority of silver trading doesn't involve physical metal changing hands. It's contracts, futures, derivatives, paper silver that exists only on computer screens. And for years, this paper market has been able to suppress physical prices through sheer volume of trading. When physical demand pushed prices up, commercial traders could flood the futures market with sell orders and push prices back down. But something's changing. The ratio of paper silver to physical silver has been growing for years, and it's reached a point where the market is starting to question whether all those paper claims can actually be backed by real metal. It's like a bank that's issued way more deposit receipts than it has cash in the vault. Everything's fine until people start asking for their money. And they're starting to ask. Look at what's happening with physical silver ETFs. Investors are increasingly demanding actual delivery rather than just holding paper claims. The COMEX silver inventories, the physical metal backing those futures contracts, have been in a declining trend, not a gradual decline. A concerning decline that's got market insiders worried about what happens if delivery demands accelerate. Before I go further, I want to mention something quickly. If you're watching this and you've got retirement savings you're concerned about protecting, I put together a free guide that breaks down exactly how thousands of American retirees are using specific strategies to protect their wealth from everything we're seeing in the markets right now. It's in the description below. No cost, just information that could be valuable for your situation. Grab it while you're thinking about it. Now back to what's happening with this breakout, because the technical picture is only part of the story. The real story is what's driving the technical breakout. And that's where things get fascinating. Central banks are buying gold at record levels. Everyone knows that. But what most people don't realize is that silver tends to follow gold with leverage. When gold moves up 10%, silver historically moves up 15% or 20% or more. It's called the gold-silver ratio, and it's one of the most reliable relationships in the precious metals market. Right now, that ratio has been compressed for years. Silver has been underperforming gold significantly, which means one of two things has to happen. Either gold comes down to meet silver, or silver explodes up to catch up with gold. And given everything happening in the global economy, which scenario seems more likely? Think about the macro environment we're in. We've got central banks around the world that have printed more money in the last few years than in the entire previous history of their existence. We've got government debt levels that are mathematically impossible to pay back through taxation alone. We've got geopolitical tensions that are driving countries to diversify away from dollar-denominated assets. This is the environment where precious metals thrive, not because of speculation, because of fundamental monetary physics. When you create more currency units, each unit becomes worth less. It's not complicated. And silver, as both a monetary metal and an industrial commodity, benefits from both the monetary debasement and the industrial demand growth. But here's what makes this moment different from previous silver bull markets. In the past, silver rallies were driven primarily by investment demand. People bought silver because they thought it would go up. That's sentiment driven. That's speculative. That can reverse quickly when sentiment changes. This time, you've got investment demand plus industrial demand that's not optional. Solar panel manufacturers can't decide to stop using silver because the price went up. EV makers can't switch to a different metal mid-production. 5G networks require silver in their components. This is demand that has to be met, regardless of price. And that creates a completely different dynamic. Because when industrial users realize they need to secure supply, they don't wait for dips. They buy. They lock in contracts. They build inventory. And that puts a floor under the market that didn't exist in previous bull runs. Let me tell you what happened the last time silver broke through a major long-term resistance level. It was in the late 1970s. Silver had been trading in a range for years, and then it broke out. What followed was a move that took silver from single digits to nearly $50 in a matter of months. Now, I'm not saying that's going to happen again. The circumstances are different. But I am saying that when silver breaks major technical levels, the moves can be explosive. And here's why. Silver is a relatively small market compared to other commodities. The entire annual silver mine production is worth less than what some tech companies spend on stock buybacks in a single quarter. It doesn't take massive amounts of capital to move the silver market, which means when momentum builds, when technical levels break, when the trend becomes clear, the price can move faster than most people can react. That's what we're seeing the beginning of right now. The breakout through this 40-year resistance isn't just a technical event. It's a signal that the market structure has fundamentally changed, that the forces that kept silver contained for 4 decades are no longer strong enough to hold it down. Think about what had to happen for this level to break. You had to overcome decades of commercial short selling. You had to overcome central bank indifference to silver as a monetary asset. You had to overcome investor preference for gold over silver. You had to overcome the paper market's ability to suppress physical prices, All of those forces had to be overwhelmed simultaneously. And they were. What does that tell you about the strength of the forces pushing silver higher? It tells you this isn't a temporary squeeze. This isn't a short-term speculative frenzy. This is a fundamental repricing of silver based on supply and demand realities that aren't going away. Now, let's talk about what happens next. Because breaking resistance is one thing. What the market does after the break is what really matters. In technical analysis, there's a principle called the measured move. When a price breaks out of a long-term consolidation pattern, you can often project how far it will move by measuring the height of the consolidation and adding it to the breakout point. With a 40-year consolidation, that measured move suggests price targets that sound absurd to most people right now. But here's the thing. Markets don't care what sounds absurd. They care about supply and demand. They care about momentum. They care about where the buyers and sellers are. And right now, after this breakout, the technical picture suggests there's very little resistance above current levels until you get to prices that would represent multiples of where we are now. That's not hype. That's just reading the chart. When you break through the ceiling that's contained prices for 40 years, there's nothing above you but air. No established resistance levels, no historical selling zones, just open space where price can run until it finds a new equilibrium. And while the technical picture is bullish, the fundamental picture is even more compelling. Because unlike a stock that can be diluted through share issuance, or a cryptocurrency that can be forked, or a fiat currency that can be printed, silver is a physical element. There's only so much of it. And once industrial users consume it in solar panels or electronics, it's gone. It's not coming back to the market. This is different from gold, where most of the gold ever mined still exists in some form. It's in jewelry, in bars, in vaults. It can come back to the market if the price is right, but silver gets consumed. It gets used up. And the amount being consumed is accelerating while the amount being mined is stagnant. Do the math on that. Every year, industrial demand consumes more silver than is being mined. The deficit has to be made up from above-ground stocks. But those stocks aren't infinite. At some point, the market has to ration supply through higher prices. That's not a prediction. That's just logic. And the market is starting to figure this out. That's what this breakout represents. It's the market waking up to a supply-demand imbalance that's been building for years, but was masked by the paper market's ability to create infinite paper silver. But you can't make solar panels out of paper silver. You can't build EVs with futures contracts. You need physical metal. And when industrial users start competing with investors for that physical metal, prices don't just go up gradually, they spike. We've seen this movie before in other commodities. Remember what happened with palladium? It was trading around a few $100s, and then automotive demand for catalytic converters overwhelmed supply. The price went from hundreds to thousands in a relatively short period, not because of speculation, because of actual physical shortage. Silver is setting up for a similar dynamic, except the industrial demand drivers are even stronger. Solar, EVs, 5G, medical technology, electronics. These aren't niche applications. These are massive global industries that are all growing simultaneously. And here's something most people don't realize. When industrial users get worried about supply, they don't just buy what they need for next month. They buy 6 months forward, a year forward. They build strategic inventory. Because the cost of running out of a critical input is far higher than the cost of carrying extra inventory. What happens when solar panel manufacturers, EV makers, electronics companies, and everyone else who needs silver all decide to build inventory at the same time? They create a demand surge that the market can't meet at current prices. Prices have to rise until demand is rationed, until some marginal users decide they can't afford silver at the new price and drop out of the market. But which users drop out? Not the ones making solar panels that governments are subsidizing, not the ones making EVs that have years of back orders, not the ones making 5G equipment for a global infrastructure build-out. The marginal users who drop out are the ones with the most price-sensitive demand. And in a market where most demand is becoming less price-sensitive, that means prices have to rise a lot to ration supply. This is the setup. This is why the breakout of a 40-year resistance level isn't just a technical event. It's the market recognizing that the old equilibrium is broken and a new one has to be found at much higher prices. Now I know some of you are thinking, But what about the commercial shorts? What about the banks that have been suppressing silver for years? Won't they just push it back down like they always do? Here's the reality. The commercial shorts are in trouble. You can see it in the commitment of traders' reports. Their short positions are at levels where they're losing massive amounts of money with every dollar silver rises. And unlike in the past, they can't just add to their shorts indefinitely because the physical market is tightening. If they keep shorting and industrial users keep demanding delivery, they're going to get caught in a squeeze that could bankrupt them. Some of these commercial shorts are already starting to cover. You can see it in the data. They're buying back their short positions, which adds fuel to the rally. And as more shorts cover, it creates a feedback loop. Covering pushes prices higher, which forces more shorts to cover, which pushes prices even higher. This is how short squeezes work. And in a market as small as silver, a short squeeze can be absolutely explosive. We're talking about price moves that happen so fast that by the time most people realize what's happening, the opportunity is already gone. That's why this breakout matters so much. It's not just telling you that silver is going up. It's telling you that the dynamics that kept silver suppressed for 40 years are breaking down, that we're entering a new phase where the old playbook doesn't work anymore. And if you're sitting on retirement savings, if you've got wealth that you've spent decades building, you need to understand what this means for your purchasing power. Because when monetary metals break out like this, it's usually telling you something about the currency they're priced in. Silver isn't going up in a vacuum. It's going up because the dollar is losing purchasing power, because the monetary system is under stress, because people and institutions are looking for stores of value that can't be printed or debased. Quick aside here, and this is important. If you're sitting on $100,000 or more in retirement accounts, you need to understand how precious metals can fit into a retirement strategy. I put together a comprehensive guide on how gold IRAs work, how you can get physical precious metals into your retirement account without tax penalties, and what you need to know to make an informed decision. It's in the description. No obligation, just information. But given what's happening in the markets right now, it's worth understanding your options. Because here's what most people don't realize until it's too late. The time to protect your wealth isn't after the crisis hits, it's before, when you can still make moves without panic, when you can still think clearly and make rational decisions. And right now, we're in that window. Silver breaking a 40-year resistance level is a warning shot. It's telling you that something big is coming, that the monetary system is under more stress than most people realize, that the old assumptions about what's safe and what's risky are being turned upside down. Think about what's happened to the dollar's purchasing power over the last few years. Think about what's happened to the cost of food, energy, housing. That's not inflation in the traditional sense. That's currency debasement. That's what happens when you create trillions of new currency units and expect them to hold the same value as the old ones. And it's accelerating. The government spending isn't slowing down. The debt isn't being paid off. The money printing isn't stopping, which means the pressure on the currency isn't going away, which means the flight to hard assets isn't going away. Silver is a hard asset. You can hold it in your hand. It can't be printed. It can't be debased. It has 5,000 years of history as money, and it has industrial applications that make it indispensable to the modern economy. That combination is incredibly powerful because it means silver has a floor from industrial demand and a ceiling that's unlimited based on monetary demand. When both types of demand are rising simultaneously, you get price moves that shock people. And we're just at the beginning of this move. The breakout just happened. Most investors haven't even noticed yet. The mainstream financial media is still focused on stocks and bonds and cryptocurrencies. They're not paying attention to what's happening in the silver market. But the smart money is paying attention. You can see it in the flows into silver ETFs. You can see it in the premiums on physical silver coins and bars. You can see it in the tightness in the wholesale market. The people who understand markets, who understand monetary history, who understand supply and demand, they're accumulating silver right now. And they're not doing it because they think it might go up a little bit. They're doing it because they understand that when a 40-year resistance level breaks, when the technical and fundamental pictures align like this, when the macro environment is this supportive, you're not looking at a 10% or 20% move. You're looking at a potential repricing that could be multiples of the current price. Let me put this in perspective. The last time silver had a major bull market, it went from single digits to nearly $50. That's a multiple of 5 or more. Now, I'm not saying that's going to happen again, but I am saying that the setup right now is arguably stronger than it was then. Back then, it was primarily investment demand driving the move. This time, you've got investment demand plus industrial demand, plus a supply deficit, plus a paper market that's losing credibility, plus geopolitical tensions, plus currency debasement, plus central bank buying of gold that's pulling silver along with it. You've got more bullish factors aligned right now than at any point in silver's history. And the breakout of this 40-year resistance level is the market's way of saying it recognizes that. So what do you do with this information? That's the question everyone asks. And the answer depends on your situation, your risk tolerance, your time horizon, your overall financial picture. But here's what I can tell you. The people who make life-changing wealth in markets aren't the ones who wait for confirmation. They're not the ones who wait until everyone else has figured it out and the move is already over. They're the ones who recognize inflection points early and position themselves before the crowd arrives. This is an inflection point. A 40-year resistance level breaking is not a common occurrence. It's a generational event. And if history is any guide, what follows these kinds of breakouts is a move that most people will wish they had participated in. But here's the thing about markets. They don't wait for you to be ready. They don't pause while you think about it. They move, and either you're positioned or you're not. And in the silver market, when moves happen, they happen fast. We're talking about a market that can move 5% or 10% in a single day. That can double in a matter of months when the conditions are right. That can go from interesting to life-changing before most people even realize what's happening. That's the nature of a small market with big demand drivers. It's volatile, it's fast, and it rewards the people who understand what's happening and act on it. Now, I'm not telling you to bet the farm on silver. I'm not telling you to do anything reckless. What I'm telling you is to pay attention, to understand what this breakout means, to recognize that we're in a unique moment where technical, fundamental, and macro factors are all aligned in a way that doesn't happen often. And to ask yourself a simple question: if silver does what it's done in previous bull markets after breaking major resistance levels, will you be positioned to benefit from it? Or will you be watching from the sidelines, wishing you had understood the significance of what was happening right now? Because that's what it comes down to: understanding. Most people miss opportunities not because they're unlucky, but because they don't understand what they're looking at. They see a chart breaking a resistance level and think it's just another day in the markets. They don't understand the significance of a 40-year level. They don't understand the supply-demand dynamics. They don't understand the monetary implications. But you do now. You understand that this isn't just a technical event. You understand that there are real fundamental reasons why this level broke. You understand that the forces pushing silver higher are structural, not temporary. You understand that the old dynamics that kept silver suppressed are breaking down. The question is what you do with that understanding. And here's my suggestion: don't just take my word for it. Do your own research. Look at the charts. Look at the supply-demand data. Look at what's happening with industrial demand. Look at what central banks are doing. Look at the macro environment. Form your own conclusions. But do it now, because markets don't wait. And by the time this move is obvious to everyone, by the time the mainstream media is talking about it, by the time your neighbor is asking you about silver, the easy money will already be made. The easy money is made by the people who recognize inflection points early, who understand what they're looking at, who have the courage to act on their convictions before the crowd validates them. This is one of those moments. A 40-year resistance level doesn't break every day. When it does, it's telling you something important. It's telling you that the market structure has fundamentally changed, that we're entering a new phase, that the old rules don't apply anymore. And if you've been watching the silver market, if you've been waiting for a clear signal that the bull market is real, this is it. This is the signal, the breakout of a generational resistance level with volume and conviction that tells you this isn't a false break. This is the real thing. So here's what I want you to do. First, if you haven't already, grab that free guide in the description. It's got information that could be crucial for protecting your retirement savings in this environment. Second, do your own research on what's happening in the silver market. Don't just trust me or anyone else. verify it for yourself. And third, make a decision, because indecision is a decision. It's a decision to stay on the sidelines while the market moves without you. And for those of you who've watched this all the way to the end, I've got something special. That guide I mentioned, if you're an American retiree with at least $100,000 in any retirement account, and you mention you watched this video to the end, you'll get access to an exclusive one-on-one educational web conference. No obligation, no pressure, just a chance to get your specific questions answered by someone who understands this market inside and out. That's only available to people who watched all the way through, so if that's you, take advantage of it.